Welcome back. The Trump rally rolls on. Take a look. The major averages, the Dow, NASDAQ, S&P 500, and the Russell 2000 indexes, closing at another record high, second straight session yesterday. It is the final full day of trading for the week, and futures right now searching for some direction. As you see, the Dow Industrials unchanged. Joining us right now is GFI Group Chief Macro Strategist John Spallanzani. John, good to see you.
Good to see you.
What do you think? You want to put new money to work right here?
I think, yeah, I think it's okay to put new money to work. I think it's good to keep old money working. I think that right now we have a chase for performance, I think, as we go into the year end. So right now we'll probably have a little Thanksgiving lull. But I think going forward, you know, there's a 100% probability that the Fed are going to hike rates in December. And the market's going up. Wow. So that's a pretty big thing.
Tell us what are people talking about on trading desks? Is this truly because of Trump and his economic policy?
I think it's a combination of a veil of uncertainty that has been lifted from the global markets, really. I think that's the most positive thing. We saw CEO confidence really ramp up after the election. We obviously saw consumer confidence also ramp up on a daily basis since the election. So I think what we're seeing is with three houses of government unified, a lot of things can get done. And I think Trump is kind of the one who is the art of the deal maker to get those people in the room.
Yeah, it feels like the market's giving Trump a lot of credit here. The other thing I'll point out is, remember going into Election Day, we had this really long streak of 10 days where the S&P 500 went down. You had to go back to 1980 to the Carter administration to find a streak like that. Now, when we start talking about the Carter administration, we're talking about a lot of doom and gloom, so we're seeing a lot of that come back up. You know, the thing that I'm thinking here is that, you know, people, I see what the banks have done, and they're up 14, 15%, as we were just discussing, since Election Day. A lot of people are saying Dodd-Frank regulation can be rolled back. That sounds great. Hey, I'd love that. The thing to remember is Chuck Schumer's already pushing back on this, and we have to ask ourselves, the folks in Pennsylvania, Michigan, Wisconsin who voted for Donald Trump, were they really voting for bank deregulation?
Yes, they were voting for a rollback of regulations.
And how much of the rally in the banks is the fact that you've had longer-term interest rates also move up, and that they're going to be more profitable because of what's happening with interest rates?
Also, who's going to lend for infrastructure are going to be the banks, right? So I think that's also part and parcel with the whole story. But remember, you know, Trump has two Fed appointments to make, one of which is the bank regulator. So that's a huge appointment. I don't think he's going to hire somebody who's going to be a hawk. So I think that's going to be positive. So they don't have to, everybody thinks they're going to do away with Dodd-Frank. That's not going to happen. But just rolling back some of these regulations is going to be huge. And obviously the market's telling you that. Not to mention the fact that obviously banks are trading very cheap compared to the rest of the market. They're really trading 15 times earnings.
You saw that overtime rule got shot down by in a court decision. President Obama's overtime rule, which I think was one of more than 600 record economically significant regulations that came out of the White House in the last 8 years.
2,000 pages or something nuts like that.
It's insane. It works out to be, I think, $750 billion at a minimum, which is about, it's over $2,000 a household in terms of the economic impact of those regulations.
Onerous regulations.
What about small cap? So we've had a double-digit gain in the 2 weeks since President-elect Trump. Right, exactly. Is that overdone?
No. If you look at a lot of these charts, especially the small cap chart, there's a huge breakout in small caps. Obviously, Trump helping a lot. The fact that the Russell 2000 is overweight financials also helps a little bit. And also the fact that the increase in interest rates are not going to hurt small caps as much as large caps. And they're also very in tune with what's going on in the economy, because most of the market caps obviously between, you know, $2 and $7 billion. So you get a lot more bang for your buck in those small caps. So
actually,
I think
you would think that the rollback in regulation is going to help the small caps more than the large caps.
Yes, very much so. So I think that, you know, you look at the Russell new high, really nice new high and a breakout. If you look at the S&P, same thing, you know, on a monthly basis going back all the way on the charts, you know, you have a nice monthly breakout. Same thing on the Dow. You know, the diamonds right now are really leading. So the Dow is actually leading because those big cap, mega cap stocks are also doing well on the year. They were doing well prior to that.
Those health insurers.
Banks and the transports.
Right.
Well, you also have a lot of commodity-sensitive type stocks in there as well, and the commodities are doing very well.
Why are commodities rallying so much? Is that a banking on construction?
No.
I mean, when you talk about iron ore and copper and all the things that is used to construct homes and buildings.
Well, prior to the election, we started to get a lot more green shoots, right? China data was supposed to fall off the cliff. It did not. China actually is doing better. Same thing with Europe. Europe is doing better. People said the yuan, as soon as it went to 7, the world was going to blow up. It was a 6.92 last night. The world is, the dollar strengthening means the yuan's weakening. So actually, Trump is kind of getting what he wanted, was a recalibration in the Chinese currency.
The markets have been very orderly that way. The problem a year ago with the yuan was that big collapse. We haven't seen that yet. It's almost like the Chinese have climbed the learning curve. They've learned how to control that. We'll see what it means for their reserves, but so far, so good.
Are you selling into this rally, Michael?
I'm definitely telling people to hedge or to over. We can say the Russell looks great in the chart. I will say on relative strength basis, the Russell looks a little overbought to me. I get why it's going better. It'll probably keep going better. This week is tough with, you don't want to fade a dull market. It's a holiday week. Seasonals, continuation.
Are you on the other side of that trade?
No, I think what we're going to see is obviously the market rallies to the inauguration, and then we'll probably see a sell-off. In the as he's confirmed,
all the way to January 20th. You
yes.
think we're in good footing?
We're on a nice glide path to the inauguration. And then obviously people are going to take profits and see exactly how much he's going to get done within those first 100 days, right? So really we're in a honeymoon period because he can say whatever he wants. He's not the president yet. He's the president-elect. Obama's still in charge. After he puts his hand on the Bible and swears that he's the president, now we have to see exactly what's going to happen. And I think that'll be when you see the profit taking.
It's a hell of a honeymoon.
And then obviously it's not going to be a collapse. You might see a little bit of a dip, and that will be another buying opportunity, especially with rates at 2% or Fed funds at 75 basis points. What you see is the smart money. Every time there's a dip, they buy it because they know it's going to revert back to the mean. So that dip, whether it's 3%, 4%, 5%, that's a 5% return on your money when you get back to the mean. So that's why you're seeing the dips get shallower and shallower.
Wow.
Rate hike or not, the Yellen put is alive and well and living in the markets.
And Yellen,
rate hike December 14th?
100% baked in. I hope they 100%. Do. Yes. Yep.
That's why what the 10-year's done. It's already tight.
Exactly.
The market's
and
already
bonds
tight
probably rally after they hike rates.
John, good to see you.
Good seeing
Thanks
you.
so much. John Spallanzani there. Take a short break. Coming up, the president-elect yet to name some of the top positions in his administration. The buzz surrounding Secretary of State and Defense Secretary up next. Plus